Mortgage rates crashed by 47 basis points this week. So is the housing market turning around? Well, the weaker inflation numbers last week seem to have crashed the mortgage rates, and some lenders are seeing a significant increase in demand from home buyers for new mortgage loans. But not so fast, executives and loan officers are saying, stating that it is just too soon to suggest that this is a turning point for the market. According to the most recent Freddie Mac survey, the 30-year fixed rate reduced this week to an average of 6.61%, down from last week's 7.08%. Historically speaking, that's a very quick drop. So why is that? I mean, that's the question on the consumer's mind right now. Well, Sam Cater, the chief economist at Freddie Mac, says mortgage rates fell this week due to incoming data that implies inflation may have peaked. The Federal Reserve is expected to keep interest rates high because inflation is still high, and consumers will continue to feel the impact. So while the reduction in mortgage rates is wonderful news, the housing market still has a long way to go, according to Cater. I think that's how you pronounce his name. And he isn't alone in his opinion either. Frank Capobianco, senior vice president at Cardinal Financial Company, said, "We are seeing some alleviation. However, a lot of people are waiting to see the CPI statistics for December and the Fed meeting conclusion before declaring that this is the tipping point." But those are opinions. They may be right, maybe not, but the Mortgage Bankers Association's data is not so gloomy, and I'll get to that in just a second. But you see, the recent rate cuts are undoubtedly proving helpful to buyers, but affordability is still an issue. But if these rates at least retain some stability, we should start to see a higher number of potential buyers re-enter the market. And if you like the sound of that, let me know by hitting the like button. Now, according to a poll this week by the Mortgage Bankers Association, demand increased for purchase applications across all loan types this week. This is the first time in 7 weeks mortgage applications increased. And this is almost certainly due to rates falling below 7% for the first time since mid-October. But because rates are still high and affordability has decreased as a result, the average loan amount is currently at its lowest point in over 2 years. So we're not out of the woods yet, but this does feel like a glimmer of hope. I mean, which way do you think the market is headed? Is it just a brief relief with more doom to come? Or are we on our way to recovery, even if it's a slow one? What are you personally seeing in the market right now? Share with me in the comments below. I want to know. And if you feel so inclined, pass this on. We could all use a little hope in our world at the moment. Share this video with someone you know that could use some good news. At the very least, it's better than bad news, right? Lord knows we've had enough of that. Peace, blessings, good health, and abundance to you. Thanks for watching. See you next time. Take care.